Welcome to In Early, the crypto podcast, where I speak to those at the forefront of the digital asset space, telling real-life stories, discussing the growth and growing pains of the industry, and exploring how blockchain technology has made an impact on people's lives. My name is Matt Green, and I'm the blockchain litigation lead at Shoesmiths. This week is all about DAOs, or Decentralized Autonomous Organizations, and I'm joined by Dhivyan Kandiah, Co-Founder and COO of the HoT DAO. He explains what DAOs are and how they operate, his actual experience of running one, including the benefits and stumbling blocks, as well as his contribution to the Law Commission's call for evidence, liability of people where DAOs are involved, and the Mango hack which exploited a DAO, the Uki proceedings in the US, and the tornado sanctions from the summer. We also talk about his business, the HoT DAO, which is designed to bridge the gap between real estate and blockchain, using NFTs and decentralized finance. So welcome. How are we doing today?
Yes, good. How are you?
Yeah, I'm good. Thanks for coming in. Appreciate it.
No problem. Thanks for having me.
Let's just get into it. So how did we meet? It's always a good question to start with. Can you remember?
Yeah. So one of the other guys I work with, Abdul, we were kind of on the hunt for a legal dude. And he immediately pointed me in the direction of you.
That's very good.
So yeah, we got talking. It wasn't quite, I mean, obviously doing great things here. So it wasn't quite right there, but we found a lot of other things to speak about.
Yeah, and we've sat and had coffees and breakfast and spoken about some of the things that we're going to speak to you today. And we thought, instead of having a conversation that isn't recorded, let's go and have one that is recorded. Hopefully that will enlighten some people.
Oh.
So fingers crossed. So how did you get into the world of blockchain and crypto?
So I was reasonably lucky. So I had a good interest in blockchain and crypto just from my peripheral. So, nothing to do with work. And I also happened to be working in real estate private equity. This was not that long ago. This is 2019. And I was kind of looking at stable coins in my spare time, blah, blah, just seeing how it was all very fascinating. But then I started to think, the case for a stable coin currently is basically it was just MakerDAO at that point. I mean, USDC and USDT were coming together, but MakerDAO just used Ethereum to back its stable coin. And I was obviously tracking Ethereum, incredible project, incredible infrastructure, but it's very volatile in terms of the price. So people are using that to back a stable coin. And I thought there was a better way. Real estate. I was working in real estate. So I started along the lines of thinking about how you could put real estate behind a stablecoin. And that led me to found HoT DAO.
So, I mean, we'll come back to actually how the HoT DAO works, but it's a matter of your background in property. I think, did you work in finance? Have I got that right as well?
Yeah, I didn't want to bore you through all of that, but I went through,
Let's hear the journey.
Traditional, so 2012, I started in the city and I did stockbroking. So I was just working for ultra high net worth individuals doing their kind of, I guess, side trading. So they would have their main professional wealth managed by someone like Investec. And then I would sort of use their fund money to invest in it was medium to high risk stocks. So there was a lot of investigation, there was a lot of technical analysis, but there was also a lot of literally chucked in the deep end. So they're like, here's a phone and you got to get calling. And it wasn't so much like cold calling, like literally, hello, sir, I've never met you. They say warm, but it was effectively like a list of people that had responded to an advert at some point. And then it was a case of kind of, going over. It makes you cringe now, but like at the time it was like you sink or swim. And that was like, there was powerful lessons.
Yeah, but look who you are now. You're running the DAO, you've got some thick skin. So I guess the world of finance and real estate has got you to where you are now.
Basically, yeah, that's right.
So I think for those who don't know what a DAO is, and I think it's worth you going through. So can you explain a DAO, how it works, and what does the running of a DAO look like?
Sure, yeah. So it stands for Decentralized Autonomous Organization. Decentralized is as if you would just understand the word most plainly. So instead of a concentrated area of control is distributed to token holders. So that's the decentralized part. They could be anywhere in the world. Autonomous is an interesting one. So yes, the we were talking about it earlier, but the Law Commission put out a call for evidence.
Mm-hmm.
They categorize autonomous in two potential different ways. One is the pure code. So effectively, you put in, or a group of token holders put in and come to a decision, and the code executes the decision. So that's the autonomy. It's just, it just does what a group of people tell it to do without outside interference.
Mm-hmm.
Executes basically. And the other side was saying how it's a social technical construct. So the autonomy basically to govern comes from entirely within. So in terms of you operating it, it's all from within, and it doesn't need outside actors. So actually, from me just saying that out loud, it seems like there's quite a crossover, but they made it quite distinct. But yeah, in my opinion, it's both, and it makes a lot of sense.
Well, I think we'll come on to the Law Commission's call for evidence, but day-to-day running of a DAO, what does it look like? So if someone said to you, I'm thinking about operating a DAO, what does that mean? What does a day-to-day look like? It's to do with voting, right? So what does that all mean?
Yeah, so day-to-day effectively it's like an open forum. So say you were to go to like a town meeting, you could come and you could suggest what you think is best, and that's actually probably the way I would describe it. Is like you could put your hand up and you have a reasonable voice, like people will hear you. You can make a suggestion as to how you think the town should be run. You have the chance to garner support, and then you have your chance to sort of have your sort of thoughts put into an actual decisive action. So that's kind of like what it's like all the time. So there's always most of the time there's a set period of people online who are just sort of reading through the proposals, seeing how they could improve things, blah, blah, blah. And then they might suggest something that garners a lot of support, and they build like a profile. So it's kind of like, it's all about communication. And yes, it's if you're looking to execute, it's all about voting.
So it's almost like a democratic way of running a business.
That's exactly right.
Yeah,
that's exactly right.
So it's like, as far as I'm aware, and you'll correct me if I'm wrong, but there's say 100 people and they're members of the DAO, and one of them will propose something that I guess would further the benefit of the mission of the DAO, and then it's proposed, people vote on it, and if they vote on it and it goes through, is normally 50%, 51%?
That's right.
That's normally 51%, and then it becomes part of the protocol. So then it automatically, I guess, that's the sort of autonomous bit to some extent.
Yes.
That gets put into the code, and then it just operates, and that's it.
Yeah, that's right. That's it.
Okay, and then there's like a mission, I guess, for the DAO, because you might have, and we'll come on to this a little bit later, but there might be people who want to take the DAO in a certain direction.
Yeah.
And then other people who don't. So I guess it's all about majority stakeholders.
Yeah,
is that right?
That's absolutely right. So MakerDAO, which is the biggest DAO in the world, the one that set the stage for all DAOs, I think they defined the term. There was a vote very recently about, I think it was to do with going effectively the pure decentralized way, or retaining an element of centralization. And it was very, very close. I think it was like 51-49, like Brexit style stuff.
Yeah.
And yes, it just went in favor of decentralized. And actually, I know one of the guys that was involved in making the case towards full decentralization. And yeah, he was obviously chuffed that he got it over the line. And I also know one of the guys that was very involved on the centralization side, and he's left it on principle grounds out of, taking himself out.
Oh, really? So he's removed himself from
removed himself, yeah. I mean,
so things get quite personal, or do they?
Well, you've got to remember, like, these people that are involved in the early stages of the DAO are like, they're super, super passionate. That's the only reason I think you would involve yourself this early, is if you really, truly believe in the principles of a DAO.
Yeah, okay.
Yeah,
so is it a matter whereby you have votes, and I guess it's to some extent like holding shares at a shareholder meeting, right? So if you have more shares, you get more power. So tell me how tokens work and voting works.
Absolutely. So you're right. It's effectively like holding shares in the company. The most important. So and also you could see general proposals like resolutions, that you would have in any company, AGMs. People. The key difference is that people in the normal shareholding world, can only propose a vote if they have enough shares to do so. And normally it's, effectively saying to people, we don't want retail people to be able to suggest the way that our company goes. It's only institutions, i.e. we only really care about the people with the money. With DAOs, I mean, yes, I think, the institutions generally do have a lot more say because they have more tokens, which effectively the shares, but that little person can come along and say, hey guys, I think this should be done this way. And, they can have their voice heard, and then they can accrue a following, and then they can sort of make a difference. They can make a revolution happen. That is that sort of empowerment from being so, for someone so small.
So the idea is I suppose, and this is it, you can have in a DAO a voice. It doesn't necessarily mean that you have a voting power behind you, but at least you get the opportunity to propose the way in which the business is going to be run.
Absolutely.
So normally there's I suppose in a normal business, directors board, and they're the ones who make the ultimate decisions. It's very difficult to penetrate the decision making if you're lower down. Here, it's far more democratic.
It's absolutely purely democratic. Yeah.
But it gets quite, I guess, personal and emotional. I mean, you said that one of your friends left. Does that happen a lot? Do people come and go?
See, I can only attest to the big ones that I would sort of suggest I'm more on a sort of personal level with. But I would expect it happens a lot in the smaller ones too, because, someone, again, like I say, the people that get involved earliest are the most passionate, arguably, so therefore, if something doesn't go the way they want, then they're gonna remove themselves a bit more.
So do they have to buy these tokens? Because it's like you buy it and then you get a vote. It's almost like pay to play to some extent, right? So if you want to leave a DAO, do you have to sell it? And if you sell it, what value do you sell it at? And these questions that we may not know necessarily the answers to unless you do.
Of course. So you're one way to get the tokens is just to purely buy them. Then you get a vote for every token. But the better way to get tokens, and the way HoT DAO actually enables people to get a lot of tokens, is by interaction with the protocol. And by the protocol, I mean just the group of smart contracts that the DAO governs. So contracts in the middle of the DAO all work around to make the smart contracts do their thing. And the better way is if you, for example, were to come to our protocol and interact with it. So put in some real estate NFT, which you can come to, and draw down some stablecoin, you will be rewarded in our HoT token, which is equity, just like we're talking about. And that will give you a certain amount of votes. Equally, if you come to our protocol and you stake, which effectively, I've got to be careful with language. It's like putting your money in a bank and getting a return. Yeah. So, a deposit account. However, it's called staking. So you get a rate of staking in the stablecoin plus the HoT token or the equity. Right. So the more you interact, the more you get, and obviously they're for free on top of the service which you're using the DAO. So it's interacting with that service, you get a token. So it's all essentially governed by tokens, and those tokens, I guess some places there'll be stable coins, some places they won't, some places they'll have a market value. Well, no, this is the thing. So stable coins are sort of, generally speaking, by holding stable coins, you don't have that much power within an ecosystem. I mean, you could use those stable coins to do things, but in terms of actually having the voice, it's what you call the governance token that provides that. So, what we're saying is you can incentivize people by giving them rewards in the stable coin, but also, it's like getting equity as well. Like if you're in VC, you get your salary plus you get, a stake.
Yeah.
Sorry if I wasn't clear. Yeah,
no, that makes complete sense.
And it's the governance token side, which is the voice.
Right. Okay. So in terms of what the benefits of a DAO are, I mean, we may have covered it a little bit. I have it as a specific question, but what would you say the benefits are of having a DAO, running a DAO as opposed to a normal company? And I know we've spoken a little bit about sort of democratization of running a business, but is that a benefit? Is that not a benefit? What other benefits are there?
Well, I'm in terms of a pure sort of theoretical human rights perspective, you're giving someone a voice that otherwise wouldn't have a voice. And that's that's a powerful message. And that's the message that I really like, because, this is how, I don't want to sensationalize too much, but this is how, revolutions have happened in the past. People state their opinion that, this is one that the majority have not heard. They get behind it. That person sort of builds up their kudos. They cut their teeth, they show themselves to be a responsible actor in a group setting. And that's very hard to do, generally speaking. So it gives them that platform, if they obviously have something relevant to say.
And everyone gets the same ability to vocalize, because in a normal business, say someone lower down, they may have a brilliant idea, but they've got to go up the ladder and it may never get there.
Absolutely.
Right? Everybody in a DAO has the same ability to be able to put something forward.
Of course. It's like, so, and also, you don't know what those positions on the way up would have changed by the time you get through bureaucracy. It's, instead of, effectively what I'm saying, you can work your behind off to get through the levels of a company, and it's going to take, maybe 40 years if it's a big company, something like that.
Yeah.
And then only then you have your power. But you might have the idea now and you really believe it and you think it makes a difference. Now you've got the ability to have it heard.
Okay.
Yeah.
Well, that makes sense. In as much as it is democratized business running, I suppose, is there not a lot of politicking?
Oh yeah, it's all politics for sure.
And that's it. It's because I suppose, in a democracy that we understand, in a political democracy, or in a country that runs as a democracy, there is a lot of politics. Yes. And you don't escape that with a DAO. In fact, that's how it's run.
That's how it's
run. So you have to, are there deals to be done with people as individuals? Does it encourage corruption to some level?
Oh yeah. Absolutely. This is kind of like the thing. You wanted to talk about Mango.
We'll come on to that in a bit.
There's a very interesting point to come on to go into Mango. But yes, it's a theater. So you could be a malicious actor, but you come across extremely well, like politicians. And it's kind of used in a malicious way to garner a boost to self-interest rather than the collective interest. But people are sort of blinded because they think, you're great by what you're saying. And then only by the result, then the rest of the community are like, oh man, he's done us.
Yeah.
He's done us. It's difficult.
Would a mission statement or something like that then help direct the way or the movement of the company, right? Is that something that DAOs have or not?
You would hope so. So obviously our DAO, for example, it's real estate based. It's about responsible borrowing. So you would hope that we would attract people that support those pillars, but there's no rule. We can't analyze someone's brain that's coming in. We just have to hope that that's the sort of person we're attracting.
So someone could come in, they could either interact to obtain tokens, or they could buy those tokens. And they could technically, I suppose, be a competitor of yours and try and bring you down.
Oh yeah, if they're savvy enough, you can't.
So that's one of the negatives of running a DAO, I guess.
Yes, that's a for sure negative. You got to trust in your code, as well as the way I kind of describe it as like it's kind of the game theory side of your DAO. So it's not so much as someone could hack your DAO for sure, which has happened so many times already, which I'm hoping is starting to come off a bit, but also someone could sort of gamify your DAO in their benefit to drain liquidity, which is a negative. And just for completeness, because I do have DAO, but I know that there are weaknesses. For completeness, the lack of centralization can sometimes be a big hindrance, because for very general decisions, for example, we have the ability for the staking rate and the borrowing rate to be changed by vote. Generally very simple, fast sort of, I guess, yes or no type, not quite yes or no, but it's a degree type thing. And it can often take a while for that to be instigated.
So I suppose if you want to make quick decisions as a leader, you can't. Every single decision you have to garner support, and sometimes that can be a bit tough.
Absolutely. And I will be clear as well, like at the moment, stop me if I'm wittering on, but at the moment we are more centralized, because to get something off the ground, you cannot get, a decentralized group can't do that. There has to be an element of central control. To get off the ground, we are sort of a team, and we are getting things moving, and we're setting the staking rate, building algorithms to, in real time, be able to sort of prevent, this is a bit more complicated, but the peg of our stablecoin being, making sure it goes back to its original £1 peg, for example.
Yeah, to stabilize it.
Yeah, to stabilize it without having to resort to a vote, which could slow things down.
Yeah.
So there are benefits to centralization, is I guess a kind of short way of thinking of it. But yeah.
I mean, did DAOs, we're going to come on a bit to the Law Commission, because that is interesting, but did DAOs have employees? Because I guess then you could, to some extent, control how people vote because they're employees, so that there may be, I don't know, benefits or not. Do DAOs normally have employees who have governance tokens?
Employees is difficult to define because, like, as a DAO, for example, and also in our central team, we have people in China, Canada, the UAE, like literally everywhere. So being an employee in each of those countries is difficult because our central hub is in the Cayman Islands. We've got a foundation. So it's difficult because it's a matter of, those people are contributing to your team, but there's an element of trust. These people are doing things for you, but if there was to be any fallout, it's very difficult to pin.
Well, you're giving them that autonomy, right? That's why the A in autonomy. You're trusting them to do the right thing.
Yes, correct. Yes.
And we're all, I guess, trying to figure it out.
Which brings me
to the next point, which is, and I'm going to quote what the Law Commission just said, but the Law Commission has published a call to evidence which opened on the 16th of November 2022, asking, quote, users and other experts for information about how DAOs can and should be characterized and how the law of England and Wales might accommodate them now and in the future. Are you contributing to that? And if so, what are you saying?
Yes, I am. So it's a very, it's almost like, it's a step process. So they take you through specific parts which they want you to contribute on. And the parts which I found most interesting so far, at least, center around the responsibility that you designate to people within the DAO system.
So stuff that we've talked about, problems that we've highlighted.
Yes, absolutely. And again, I don't want to merge too strongly into the Mango part, but that is the part which I found most interesting because, yes, there is a degree element. I think, well, in my opinion, I think control is extremely important. So at the beginning, you have founding members, right? And the specific part of the Law Commission report was saying that, how far do you put liability for the code, so for actually how it operates and people losing money as a result. And I thought that was interesting because at the beginning, founding members, if you've got a specific CTO and that CTO is completely in charge of the tech build and everything that goes into it, then obviously you start off with a large, I guess, liability. And because also by the fact that there's not many people using it or anyone using it at that point, then you go through, I was suggesting to make mandatory or at least explore the idea of doing the code audit, which I mentioned, doing that as a mandatory thing. It's got to go through and maybe the relevant authority needs to be notified that that's happened. And the person, there needs to be a way to have the auditors on a list because that's, again, a testament to how legitimate they are. Then you go through the kind of battle testing, or I like to call it just the game theory test to see, can someone or get a group of minds together that are, exceptional in this, you could call them white hat hackers, I think is the word.
Okay.
Or the phrase. And they will spend like a few weeks attacking your protocol to try and drain liquidity, to try and mess everything up as much as possible. And, they will, at the end, if there's no issues, they'll sign it off. And then you have the kind of two-part, I guess, accreditation, I guess you could call it. And again, I would like to see that sort of that game theory, those game theory testers put on an accredited list to go through. And then, once you come out of that, then I think it's the liability has to drop for that CTO a bit because he's got all these other two bodies are saying that everything is fine. Doesn't seem to be anything malicious. It all seems like it's protected. And then you have obviously decentralization, which comes after that. And this is and this is the thing, it's difficult after that point to trace the liability, to be honest. I mean, if the majority vote to say we want to change part of the code and the CTO does it, it gets very difficult because that CTO is like, well, I have to operate on the will of the DAO. This is the reason why I've set this up. However, without investigating intent and ability to manipulate things, am I breaching a duty of care? That's the hard part, I think.
So I think that there's two main things here, which is really, really interesting. So number one, I guess your recommendation is to stress test the DAO at the start. And by sort of attacking it, good people attacking it to some extent, stress testing it, allows the DAO to get a seal of approval from, I don't know, maybe a regulator, it may be a specific body, whoever it is, but to say, here is our seal of approval that this has been stress tested.
Yeah, exactly.
And then number two, I guess, is the ongoing tension between centralization and decentralization. You have a CTO and they may be making centralized decisions, but ultimately that person has to follow the will of the autonomous nature of it, which is democratized.
Yeah, absolutely right.
How do we go around doing that? I mean, that's probably part of the question. And I think that you're right. We're going to come on to some of the real life examples of what's happened to DAOs and why they need to be stress tested.
Yeah.
But in terms of your contribution, have you considered a way that might actively operate, or are you still trying to think about that?
Do you mean the actual accreditation part?
Yeah.
Getting it. I mean, like you just touched on, I think that's the best way, is to have like a list of, or like the government, for example, to set up a department. I don't know how these things work specifically, but you could say this is a list of like approved sort of providers of these services. I mean, the closest which I'm thinking is that, there's approved lists when you have visa sponsorship, for example.
Okay.
These
visas in like trying to come into the country.
Yeah. Completely tangential in terms of actual business, but the process of actually being assessed by someone with government centralized authority to say that these companies are good to provide sponsorship to people coming into the UK. So it's like, whatever system they have there to kind of say that this list of coders or code testers and this list of sort of gamified testers, I think that's a good start.
But in terms of onboarding bad actors onto your DAO, have you considered or proposed something to the Law Commission? Because maybe you haven't. I don't know. It's just so difficult when these tokens are available to the public, then anybody can buy them or obtain them, right?
But put it this way, like if you go to the voting booth to vote for your local MP, no one's going to come to you first and say, oh, by the way, why are you voting for this person?
True.
They're going to just say, you've got the right to vote and it's not my place to interfere with that.
It's such a tension between, because in a business, if you have a fiduciary duty to make sure that the company is promoted in the right way and that you act in accordance for the best interests of the company. In a DAO, you may come on board as a decision maker, but there is no fiduciary duty. Or is the answer that maybe the Law Commission should say that there is a fiduciary duty?
I think it's the closer you are to the beginning of the DAO or the beginning of the protocol, the easier it is to find somewhere to place liability. Because like I came up with a very simplified example, granted, but if you've got three founders, one's the CEO, one's the CFO, and the other's the CTO. I mean, you could argue in normal company grounds that the CTO, if something goes wrong with the code and people lose loads of money, you could follow it back to the CTO. But in that case, obviously the company is the one liable. But this is where you need to sort of be kind of careful. I mean, there is, so for example, we are, our entities in the Cayman Islands, we do get paid from that entity to start with. So it's kind of like, is that where you would target us? Please don't target us because we're doing anything wrong.
But there's no reason to target you.
Yeah, exactly.
No reason.
Exactly.
So don't even worry about it.
But that's the thing. But as later, it's so hard because our plan is we were going for 2 years, but it's probably more likely going to be 3 years. We want to dissolve the foundation. So the will of governance is the only kind of way to steer the company.
The recourse is that that decentralization, that democracy.
Yes. And we will have people outside the system to enact the will of that DAO because, for example, the DAO can't sign a contract. So there will be an appointed representative. Done a lot of checks in various jurisdictions about this. And we could still have that infrastructure in place, but in terms of will, in terms of duty of care, in terms of anything else really to do with director duties, is nothing.
Well, you've nicely come on to the next point, so thanks for the segue.
No problem.
So let's talk about some real life examples. So in the US earlier this year, the Commodity Future Trading Commission filed a complaint against a DAO called HoT for breaching the Bank Secrecy Act. Ultimately, the breach was by the DAO / the protocol, which were alleged to have committed the breach. But the authorities have sought to pursue the governance token holders, i.e. the human beings who hold those tokens, real life people who hold votes.
Yeah.
That compares to a UK case called Tulip Trading, whereby it was deemed that designers of a code which led to a loss did not breach the fiduciary duties. So there's a tension between the US, we're going to find human beings behind this protocol, and the UK, where they're saying, well, no, just because there are human beings who designed it doesn't mean that they should be liable.
Yes.
Do you have any specific thoughts on this?
I think at the current, like the way you described that there, it's all piecemeal. I think it's really hard to apply like a blanket rule. Like, what I was saying about working I was working forwards, but if you work backwards from what I said, from decentralization, tracking back to centralization, that's how I would do it. So, I guess, could you tell me what the actual, thing that happened that was wrong in the cases?
In HoT? I believe that they were not complying with banking laws. So there was no KYC. I think they were providing certain assets which they shouldn't have been, which were financial instruments of some kind. There's a wider story to it, but when you sort of boil it down, it's if they can't go after a protocol because essentially that isn't an individual, then they've gone after the people who have, I suppose, hold the governance tokens, or at least made those decisions. Should we be penetrating that position whereby the people who made the votes, because if you think about it, in a normal company, if it's a director and they have voted in a certain way which has caused a loss, to some extent, obviously, you can pierce the corporate veil to some point, but the company's liable. And if it's the directors who've done something specific themselves and have breached their fiduciary duties, then they're liable. But there's a little bit of tension here between the UK outlook, where it's saying, no, there isn't a fiduciary duty. In the US, where they're saying, well, actually, we want to go after individuals. Should individuals be pursued?
That's so difficult. The thing is, I would look at every case saying that, what is the operative part that has caused issue? If it's something that is in the genesis of the code that is, found a way to be exploited later, but that's maybe you could attach more liability. But if it's something that was voted recently and the community voted to, say that that's the case, then it is just...
It depends, right?
Yeah, it really does depend.
Because my view would be like, if there's like a rogue person, and again, we keep talking about how we're going to come back to Mango, and we will, but my view is if there's a rogue person who's caused a specific loss, and it's identifiable that that person's votes caused a loss, then I personally would say that that person should be held accountable.
If it's as cut and dry as that, I think you've got a great case. If you could say this wallet address is this person, this person lives here, this person also put the code in at the beginning. That's really cut and dry. It'd be fantastic. But the issues around, anonymity. This is one thing which I don't like about crypto, to be honest. I don't like the anonymity part. I like the freedom, but anonymity-wise, I would, I need to be careful here. But I'm thinking, putting a name on a wallet address, I don't think is
well. For the purposes of DAOs, it may hold people more responsible, and I think this is something that we didn't necessarily talk about. But the voters are anonymous. So you can't. Always, is that the case?
Well, the voters are anonymous only because they haven't got their name on the wallet they vote with. So they have to take their governance token, put it in a voting wallet, which, there'll be a blockchain entry saying this wallet deposit into this voting contract and initiated yes or no. And you could see that code, and that code will be a wallet address. It would be unique, and maybe on some database somewhere there'll be a matching name for it, chain analysis or something, if they've done some digging and found out that this person's this. But otherwise, no. And this is another thing, going back to the Law Commission thing, is the pseudo anonymity thing. Because I could have your wallet address. I know you did something. This person holding this wallet address did this, but I don't know who you are. I don't know how to trace you. So it's like, you're anonymous, but you're not, because I know that something you control.
Yeah.
Is that. But it's really like, it's abstract. It's abstract.
So maybe that's another recommendation to say, if you want to participate in a specific DAO, a rubber stamped seal of approval DAO, then there needs to be some KYC, and you need to say that I am Matt Green from London who lives at the following postcode, so that if you do something which is particularly rogue or causes a loss, then you are identifiable. Maybe that's something that the Law Commission
Yeah, I need to think about it more, because I think there would be more to it than that. But on the face of it, I mean, yeah, it sounds reasonable. I just think about the reason why people like to cover their tracks. And sometimes whether you've got like pretty, I won't mention specific countries, but, very heavy regimes when it comes to capital flight, for example, claiming to be a free economy and putting restrictions on, what can leave the country, etc. I think there's reasonable grounds to say, I can hide my identity. But when it comes to, sorry, I keep jumping, but Tornado Cash.
Yeah. Well, we'll talk about that right now.
Yeah, well, Tornado Cash, I think is I'm trying to think of light language to use about it. I think they deserve everything coming to them.
Well, let's talk about Tornado Cash then, right? Yeah. So just for people who don't know, so in the summer, Tornado Cash was sanctioned. So Tornado Cash in the US, what it does is essentially it seeks to muddle transactions on a blockchain, which is helpful for money laundering. But it is a protocol. So there's not necessarily individuals behind it. It's just a piece of code. So if we think about this, right, sanctions are designed to change an individual or a regime's behavior so that it can re-participate with a specific economy. So if the US are sanctioning it, then essentially they're saying, you may not participate in our economy until you fall in line with our thinking or stop doing what you're doing. But to sanction a protocol is a bit odd, because you can't change its mind. It's a piece of code. So again, they're sort of holding a piece of code accountable rather than human beings. And it all seems a bit odd. I mean, clearly you have thoughts on this.
Yeah, I mean, it's interesting what you say, because I think in this particular instance, the code and the sort of design or intended use for the code are so sort of, to me, glaringly obvious, the main use case for it. So it's really, it's hard, because it's like, exists as a piece of code, but the purpose of that code is very difficult to see any other reason than money laundering, in my opinion. People say I saw some absurd argument about wealthy people covering up, making donations to charity. And I was just like, you can, first of all, you can request, anyway. You can request that you remain anonymous. And also you could, set up you could just deposit from your wallet to wherever you want to send it to, but they don't know who that is. They just,
unless someone physically goes and traces it, gets disclosure orders, goes through a massive rigmarole, then it doesn't make any sense.
It doesn't make any sense. But so I saw, that was the only argument I saw. To be fair, I've only done limited reading on it, but yeah, in this instance, it seems so obvious to me that collection of code has a sort of a primary use. So I can see why they did it, because it's just such a dangerous thing. But in terms of like precedence in further application, I can see it's a bit dangerous, because like you could have a very responsible group of code put together, but there's been one malicious case, it's been abused, and they can slap the same thing on it. I don't know how precedence works, but they could say, yeah, we're enough of the code because it's got this potential bad outcome. Yeah, investigation, I think, is probably key.
Yeah, I mean, it just seems a bit odd well, I suppose, does it seem odd? I suppose the authorities in the US have said, we believe this to be bad, we're cutting it off. But is sanctions the right way to do it? Maybe they've just used the wrong mechanism. Maybe. I don't know, but it's interesting to see that certainly authorities in the US are pursuing code, protocol, and where they can, the individuals behind it, which is again, sort of to some extent against tulip trading and the outcome that was considered there.
Is it a case of, so when they say sanctioned, do they mean restricting access. Is that the
I think that's it, yeah. But the whole idea of a sanction, as far as I'm aware, is to change the behavior. So, things that are going on with Russia, for instance, right now.
Yeah.
There are sanctions against individuals and companies to say, if you continue to participate in this behavior, then we're going to stop you interacting with our economy.
Yeah, it seems like the wrong word. Because
it seems like the wrong word, yeah.
It's just full closure of something rather than sanctions, because it's discouraging people from using it, but not to a point to cause their, to something to give, for something for behavior to be altered.
Yeah,
it's just a shutdown. I mean, what is it? It's not a sanction, is it?
I don't know. Maybe they should have just blocked its use somehow via some technicality. I mean, ultimately it still achieves the same thing, right? So we're sitting here talking about it, and it doesn't really make a difference.
No, true. You made me think about the word sanction, because that's absolutely right. Sanctions are, designed to put people off doing something which they're already doing, something they're already doing. And in this case, if someone was interacting with Tornado Cash, they have put them off, but by completely closing it, and it doesn't change their behavior in any way, because it's your relationship with that thing is ended,
and it's an objective piece of code. It's not going to change its mind on its own. It's not going to decide to not exist.
But that's what I keep having to remind myself, because the sanction is on the code, not against the people using it.
Well, I'm not even sure they found the people. It was not even using it, it was designed it. But then you fall into tulip trading territory, where it's like, well, if you find the people who designed it, are they liable?
Yeah.
In some cases, as you said, right, there's no blanket rule. I think you would need to go and investigate and see whether you are able to sort of pierce this, I was going to say corporate veil, but it's not the right word. It's sort of like the DAO veil, the protocol veil to some extent.
Yeah, exactly.
But let's talk about Mango, because we've sort of referenced this a few times now.
Yeah, sure.
So in October of this year, a hacker stole $100 million worth of assets through an exploit in the Mango Markets Solana Decentralized Finance Exchange. For those who sort of hear that I've said a load of words, it's essentially an exchange which is decentralized. The hacker drove up the value of their collateral and then took out the loans from the Mango reserves. He called those debts, and then using governance tokens that he'd stolen, i.e. he now has all these voting rights, he became a voter in the DAO and proposed a bounty of $47 million, i.e. he would send the rest back. The DAO then voted in favor of that proposal, and gave the hacker a huge swathe of voting rights. It was then able to pay off its bad debts. So the hacker then ran away with loads of money. Now, a friend of mine, Danny Hassan at Chainalysis, put this on LinkedIn and said, and quite rightly said, this is ridiculous. Like, we know who the individual is. He's appearing, I think there were videos of him appearing saying, this is what I did. It was all open. I hacked you. And now I'm essentially coming via the DAO to legitimately take money. How can we stop stuff like this happening? Like, what's going on? Is this not a fundamental vulnerability of DAOs?
Let's unpack that for a second. So I think
sorry, I put a lot on you there.
No, not at all. It'd be good form, sort of good basis for discussion. So I guess the first thing there is the fact that he's taken advantage of, the second thing I was saying is the game theory part of vulnerabilities. So he's driven the price up. I don't know the exact details, but he hasn't hacked the thing. He said, basically, this is an error which you've got. It's the most obvious way I can show you. It's by absolutely draining the hell out of it.
Yeah.
And then he's coming back and he's saying, in exchange for giving half back, it's like, I pointed out this massive error. It's such a difficult one, because often the principle is very clear, because what happens a lot of the time, and we are going to do the same thing because we're still very early. So what we're going to do is have white hackers come in and try to exploit, game theory issues, and we're going to obviously pay them, and they're going to know what we're going to pay them, and then they're going to go ahead and attack. But in this instance, he's made a contract, retrospectively. He's done the thing. Obviously, he's commanded a lot more because of what he's drained, and then he said, here's my sort of, parlay. Here's how I'm going to negotiate with you. So it's like a power dynamic. The power is initially with us to put people in charge of attacking, but he has done it, and he's the one with the power. So I think in principle, it's like okay to do that, but yeah, in terms of how he's gone about it, it's very difficult. I mean,
so step one, I suppose, was he actually manipulated the price, right? And I suppose from your recommendations to the Law Commission, by putting in, as you call them, sort of white hackers, they could have avoided that. It's like when...
If they were good enough.
If they were good enough.
Yes, yeah.
But on the basis that someone third party comes in to stress test your DAO and put their rubber stamp of approval on it, if someone then hacked like this guy did in Mango, then you might be able to go back to that third party who stress tested you and sue them for negligence, whatever it is, potentially.
Yes, yeah.
So I suppose step one, the way that this was done could be prevented by your recommendation, which is to see if there is a sort of stress test.
They may have gone through it though. But this guy, yes, I would suggest, yeah.
And then step two, he's gone in and manipulated by virtue of the fact that he now owns all these tokens. He now has all these voting rights. So he can essentially force the DAO to vote in a particular way. Yeah. And I think he had a majority, but I don't think he had all of them. And I think to some extent what you were saying, he used politics to get everyone on board. But how can we avoid stuff like this happening again? Is this something that is inherently going to be a problem in DAOs?
I think so, because again, it's because he's got the voting rights. It's so difficult, because if you start thinking about safeguards, having to actually format the safeguards and how they're triggered, etc. I wouldn't even know where to start, because I mean, defining malicious, or detecting malicious activity at an early stage is obviously impossible. It's very easy once the result has happened, but like if it's in the inception stage, and there's actually been a bit of work done by one of the guys I said at Maker. He actually, and what we tried to actually investigate, is there a way to take all the data on DAOs possible, which bit of a plug here for Deep DAO. They've got essentially all proposals, all votes, all proportions of voting, all in one central database. And there are millions and millions, and they put them all together. We were trying to think of a way to put an algorithm to go through all of the data and actually suggest, analyze what's turned out to be malicious and see if there is any kind of commonality between them. But it was too big a task. And that because it's just, it could depend on what someone's doing one day, their mind has changed and what's happening in the world. There's so many factors. So I think, short answer, I don't think there's really a way to do any controlling of that.
Do you think then DAOs might die away? Because it's just so difficult. You don't have, if you had a hive mind of voters, then it would be a success, right, every time.
I think because we're so early in the life of DAOs, and in earliness, I think you get a lot of holes that get plugged, and slowly by iterations, you get a better functioning system. Yep. And I think that's an argument for it going that way. I think there is hope for DAOs. I think extremely Make a DAO again is a bit of a shining pillar in my eyes in terms of how a DAO should be run, because you get obviously all these massively interested people voting in certain ways, and most of the time it's been completely non-malicious. But another thing which I think is a bit of an issue is in terms of, I guess, a DAO is going to die a death, and currently the people that integrate with DAOs are generally very knowledgeable, educated people who, know how to present their arguments, balance it out, and obviously handle counter arguments well without sort of resorting to abuse or, being too emotional. And in terms of a further expansion of that, I would debate whether it could be sort of scaled to the masses, to be honest. I think where DAOs are really useful is where you have a lot of people, and I'm talking like hundreds of thousands to millions
Okay.
around a particular topic that are all engaged. And, you know, to get the best out of a system, to get the best progress in a certain sector. But for sort of real mass stuff, I would need to think more about it. I think it'd be very difficult.
I think it just, yeah, I mean, that's very helpful. I think to some extent it may slow the process down if it's too big. But then again, you may need that to sort of weed out bad opinions, or I suppose bad opinion sounds in itself a little bit.
Exactly. What is a bad opinion?
A little bit of an issue.
Yeah.
But, I want to turn now to actually your business and the HoT DAO. So how does the HoT DAO work in simple terms? What is it and what are you trying to achieve?
Yeah, sure. So just going back to what I said at the start of the podcast, stablecoins, at least DAI as an example, and don't get me wrong, I think they're fantastic, but basically this particular stablecoin DAI is backed by Ethereum. And Ethereum is a very volatile cryptocurrency. So generally what happens, you put in, say, we'll just use simple fractions for the sake of it. You put in, 10, not fractions, what am I saying? let me try and articulate that.
Yeah, no worries.
So say you put in £100 worth of Ethereum into a MakerDAO contract, and you could draw down 50 DAI. And DAI is a US dollar stablecoin, so it's designed to be stable. And you know, if you go to places like Coinbase, Binance, you can actually exchange DAI for $1 1-to-1. So
but the idea is it holds its value. It's just a cryptocurrency blockchain asset, digital asset version of a dollar.
Yes, exactly. So people that own Ethereum, they see long-term value in it, but they want to interact a little bit more with the crypto ecosystem without selling it. So they lock it up and then they get DAI as a stablecoin. They can go buy other cryptocurrencies, blah, blah, do what they wish, or get dollars. So effectively, you're getting a loan in DAI against Ethereum as collateral. Ethereum has in the past, you know, dived by like 40, 50% in a week, which, you know, if you're borrowing at 50% LTV, you know, you're borrowing 50% of the value of the collateral you've locked up, then that can be very dangerous, because if you get below 50 in terms of your sort of collateral ratio, then your vault is going to be liquidated. And that means the protocol takes the Ethereum in there, you get zip, it takes that Ethereum and then it auctions it off. And then it uses, sorry, a bit complicated, uses Ethereum to sort of buy back DAI, closes off the vault, because obviously there's still
it's there to protect itself, right? It's not there to protect you.
Effectively, the DAO or MakerDAO in this particular instance needs to have that failsafe to protect the holdings of everyone. Because, you know, if you start saying there's no longer a valid way to liquidate in case of default, then confidence in the entire system drops, and then you get panic, and the DAO could easily break. Right? That means, you know, effectively, there's emergency shutdown methods that could get triggered. You know, it's that sort of serious. But we just thought, why don't we try and put real estate in as collateral and mint our own stablecoin? Because
so it's backed by, so it's a stablecoin, and instead of being backed by a third currency, or cryptocurrency, which can go up and down, or by something that's algorithmic, which we've seen fail.
Oh God,
this year,
without mentioning his names.
We'll keep it. Mention enough names today. But it's a stablecoin actually backed by real estate, by property.
That's right. Yeah.
Instead,
and specifically prime London residential real estate. So, you know, we've chosen that specifically because it's even through the terrible financial crisis of 07, 08, that specific class of asset held its value very well. So we are giving up to 70% LTV off of the value of what you deposit. We're working with a different company called Token House that have worked out an incredible way to digitize property in terms of value and rights into an NFT, place the NFT, and then obviously the user will then come to us, place the NFT in our protocol, and they would lock it up just like they would Ethereum, because in that form, in that NFT form, it's, you know, completely interactive with the blockchain. So when it's in there, They just lock it in a vault and then they draw down our stablecoin up to 70% of the value.
Right. So the equity of the property is essentially tokenized into an NFT.
Yeah, absolutely.
And there's one NFT for one property?
One for one, exactly. So
one for one. So when you start, I remember people always talk about fractionalization and it becomes very difficult. And then how do you, so for instance, you have 100 different fractions of it. That means how are you going to put it back all together again if there's a free market? It's a nightmare,
That's a nightmare. It's very good, I will say, for raising money, because effectively what you're doing is a share raise, you're just raising money. But in terms of ownership, if you have to sort of come back and how do you get that control back of the property? I mean, is it a percentage thing? In my opinion, it gets complicated. So you have an NFT stored, and that's the collateral for the stable coin. Yeah.
On the basis being, and I'm just regurgitating this because I'm trying to understand it.
Yeah, understood.
So the idea is that the NFT is locked up, and because the value of the property that forms the NFT is more stable than algorithmic, and because stuff like Ether and other cryptocurrencies fluctuate.
Yes.
It's a nice way to keep stability.
Absolutely right.
So then what happens next?
So at that point, the user has their HGBP, which is a pound denominated stablecoin.
So HGBP is?
HGBP is the...
So H is for?
Oh, it just stands for the HoT protocol GBP.
Okay. So your coin?
Yeah, our coin, basically. Okay. So in fact, I think...
It's a pound stablecoin.
A pound stablecoin. There is another I've heard of called pound token, where they use the it's a USDC/T model, where they just take pounds, put them in a bank account, and they mint their pound token, which I think is GBPT. And that's
way of doing it.
Yeah. And that's just, it's a tried and tested method, and it's fine. But we think that, especially with inflation, these assets, generally speaking, are very inflation proof. They've been steadily rising despite recessions. The overall trend is upwards. We're taking equity only properties, which means that there's no existing debt. So we are the first
always debt free property.
Always debt free to start with. We've been thinking about a way for second charge debt. This person will get their HGBP once they draw down, but they'll also get a slice of our equity as well, which will be worth something. So, the idea is they hold on to that equity. As the business grows, then effectively the way in which we operate is we don't take profit. We distribute the borrowing fee. People actually, pay to borrow that HGBP into the community. And often that could go on buying the governance token in the open market and burning it. Sorry, I'm trying to keep this as short as possible, but it's a value return system rather than a profit system. So everyone, including us, obviously as token holders, community as token holders, is designed to, as the DAO grows, to return value to all of us as token holders.
And it's always fully backed, because there's at the moment, obviously with FTX and everything else that's going on, trying to avoid speaking about FTX because everyone else is.
Yes.
But in a sort of world whereby people are losing trust or are considering that exchanges don't hold all the assets to back their deposits, your position is that actually you will be able to see what it's backed by, because it is real estate.
It is,
and it's not going anywhere.
And it's being audited, and also we're getting independent valuations twice a year from, I don't know who it might end up being, Knight Frank, Savills, whoever on the day sort of seems to provide the best service. That will go in to the NFT, so it will be backed, and you can trace it back to them if you wish. Also, the property will be held in custody with a custodian, which is it's a trustee company in the UK. You can actually check the records there if you want to go back further. So we can't, I know you mentioned FTX, we can't take the collateral and play silly buggers with it. Which is basically
you can't buy mansions in the Bahamas.
No, exactly. And we can't say, your money's fully backed, and then we're actually going and splurging or relying on a bull market to return funds when they come due.
But you literally physically can't pick up a building and go and run off with it.
No, you can't literally. And it's got a charge on it from the trustee. So,
And is that on land registry? So
it's on land registered. It's on land registry.
Right, okay.
Absolutely right.
Because there is a bit of a tension, I think, between sort of, to my mind, I mean, back when I was a trainee doing real estate, you sort of interact with a relatively antiquated system, which is the land registry.
Yes.
And obviously now you've got this sort of new world, this Web3 style crypto blockchain world, where you're taking something that's a bit older and revolutionizing it.
Yeah.
Have you found that there's a tension between the old system of sitting down and signing deeds and the land registry and doing what you're doing, or actually do they interact quite well?
I'd say there's not a tension, but there's been a good amount of work put into actually figuring a great system out to do this. So yeah, it's a lot of research. We found a way in which it can work really well. It would be a lot easier if we had a blockchain land registry system. I believe they've got one in Dubai. And also I think that's something that will come in our, well, I was going to say lifetime, but I think in the next 10 years.
It's got to.
Yeah.
I mean, from people I speak to in property and who have an interest in this,
yeah.
The idea would be is that the land registry or the documents held on the land registry, so all the charges, the deeds, everything would be stored as an NFT on the blockchain. And when you buy a property, you can just buy the NFT.
Yeah, that makes a lot more sense. And also the fact that it's complete, the way obviously blockchain works, you've got to have full consensus every time there is a change. Obviously that change could be transfer of title. Mm-hmm. It's tamper proof. It's obviously modern, and it's, the land registry is just, it's a dinosaur. But yeah, to go back to what you initially said, we have found a way, but we think there's a better way.
Okay, that makes a lot of sense, I think. And you want this currency, the HGBP, to be available on the open market?
Oh, yeah.
So are there instances, or is there a plan to get it on exchanges for people to buy?
Absolutely. Yep, on exchanges for people to buy. Also, we are speaking with an FCA registered on-ramp to have effectively just a one-for-one conversion with GBP and HGBP to sort of enable people just to get completely into the ecosystem, but also to change the HGBP out to GBP.
Okay.
So, and another great, sorry, I keep plugging. Another great thing is our offer, especially in the current interest rate environment, we're offering borrowing at a level of 3%. Which is obviously, a 2-year fixed, I believe is like over 6%.
Yeah, it's pretty crazy at the moment, yeah.
Plus, we're giving you 3% equity. So you are effectively borrowing at 0%. If you're talking in pure value terms. Mm-hmm. And that's like, that kind of really shows that we do want to make the community the center of this, and we do want to be, we want to show that we don't have to be attached to the central bank and the margins that come after that from commercial banks. We want to just say the system can run itself here.
Yeah.
We want to have a currency that's actually backed. I mean, fiat money, for example, is just backed. It's backed by nothing. We can't print money. Another thing is that when money is returned, principal money into our protocol, it's burned.
Yeah.
So when the collateral is not there to back it, it's irresponsible for us to keep that money in existence. So we destroy it. The interest it gets used to sort of, that's the value return for the system. But that is, interest is always going to be access to collateral because it's a man-made thing, isn't it? You charge interest. So I've got £10 here. I lend it to you. It's minted from collateral. You need for borrowing, you need to pay me 11. Where are you going to get that extra pound from? So interest, we understand needs to be in excess. But even then, that'll be a bit confusing. Even then, the value of all the collateral is going to be higher than what we lend out plus the interest as well.
Okay.
So yes, we are completely backed by real estate.
Could this not have been a project? Because the property stuff itself, creating an NFT and allowing that to be the collateral is a business idea.
Yes.
As far as I'm aware. And that sounds really interesting.
Yep.
There might be people who go, I love it. But what I don't like is that it's run like a DAO. Can they be separated, or does the business idea need to be run as a DAO?
No, well, we could obviously, yes, it doesn't need to be run by a DAO. There are two separate businesses. So Token House actually takes the properties, digitalizes them into an NFT as a service. So then the NFT is with the original person that owns the property. It's up to them then to come to us, our HoT DAO, and then lock it and then do the borrowing. So we're kind of like, the terms again, we're kind of like a bank in that regard, because we take, collateral on board and we offer borrowing against it.
There are similarities.
Similarities, exactly.
Yeah.
Right.
Okay.
So, but the DAO model, obviously, it's our choice because, again, our economic model returns value to token holders. So, we could set ourselves up as a central team and our shares just keep going up because of all the value return, but we just can't. It doesn't make sense to us.
Okay.
No.
What happens, again, I'm asking I'm sort of stress testing it myself because I like the idea. I want to understand it.
Yeah.
If a property gets knocked down or, I don't know, destroyed, or there's a flood or whatever, does the NFT get destroyed and do you transfer the value over to another property?
That's a very good point. So there are safeguards in place within the trustee custodian agreement that if there is kind of issue that, happens with that, then the property is, or the value of the property on the chain is reduced to zero, unless there is an insurance payment that comes in to actually fully back the value of the property that's been destroyed to the amount that Knight Frank or Savills actually said. And we need to see that, or the custodian needs to see that money before it then reflects forward to what's on the NFT, and then the sort of collateral position is safe.
So the insurance piece is actually quite important here.
Yeah. So
just like it would be with any other property.
Absolutely.
Right?
In the beginning, we are insisting on fully, or not we, sorry, Token House is insisting on comprehensive insurance, but we'll obviously check that as the service provider for the borrowing.
Okay. Well, that makes a lot of sense. I think my questions hopefully are questions that people are thinking when they're listening, and hopefully they understand the position a little bit more. I just want to ask a few sort of more general things. What other projects have you got going on? Is that something that you can talk about?
I don't really have anything which I'm putting my mind into other than this, because I see it as such a big thing. I do participate in the all-party parliamentary group on Web3 and the Metaverse, which I've really been enjoying. So effectively, there's MPs and there's peers that come along, and it's just one of the entry points into the policymakers to see, what the industry is thinking. Another one is obviously the Law Commission, a far more formal way of doing things.
You're doing a two-pronged attack to try and shape the industry.
Yeah, absolutely.
As you should be.
Yeah, and being extremely clear, we're going through the Law Commission side. It isn't just about, plugging my business, for example. It is showing what the advantages and the disadvantages are too. So it can be like a proper framework.
Okay. I think I'm going to ask one last question, which is, what advice would you give people looking to run a DAO?
I would make sure before you make the decision to go to start a DAO that your idea or your business is going to suit the DAO structure. So, for example, if your business relies on many definite decisions that are either yes or no, I would potentially think that, just having a centralized structure is better. But if your business kind of relies on, debate, vision, a bit of a revolutionary approach to the existing way of doing things, then I think a DAO will bring out the best in it.
That's a really nice way to end this. Thank you so much for coming in.
No problem at all, mate.
Really appreciate it.
I've loved talking. Thank you.
Thanks. Hi, everyone. I thought I'd read out some feedback that I've received from the podcast, and I appreciate continued feedback. A friend of mine has written here, I saw a few screenshots of your podcast on LinkedIn. He then sent a picture of me when I was speaking to Andrew Howard from Mexico, so it was just purely on my face. He said, "You look like Steve Jobs here. You are a strong, cool-looking man, but here we only see your bald head," which is, is fair. But I don't know why I put the word bald in. I mean, I know why I put the word bald in, but I wonder whether it would make any difference if it wasn't a bald head. But thanks very much. Keep the feedback coming. I look forward to recording some more podcasts further down the line. And thank you all for listening. This podcast does not contain any financial or legal advice, and you should not seek to rely on it as such. Opinions are the individual's own. This podcast was produced and edited by Joe Howkins, production support by Jake Key, and music by Luke Caring.